Hey everyone, it's Ryan. Today we are back at you guys. We are back on YouTube. We took a little bit of a break, and today I'm going to be kind of updating you guys as to my current holdings and positions and views on the stock market currently, and just talking about some trades that I made and a couple of other things. So let's get right into it. As everyone probably knows, the stock market has been incredibly volatile during 2022. We had some ups and some downs in the markets. We had the S&Ps bottoming so far at about $380. Were they $380 to $390? And since then, they've currently bounced back up to about 415. The Nasdaq has been even more volatile, taking an even bigger of a dump, down 11% for the year at the lows, and since then we've bounced about 5 to 6% from the lows. Me personally, I wasn't an exception. I've kind of got caught in the volatility a little bit. I've had some really nice moves to kind of rebound some of my losses, which has been quite a relief. And today I'm just going to talk you guys through what I'm doing and my current positions. So today we're up over 4%. The Nasdaq is leading today, up about 2.4%. S&P's following at about 1.4% up today. So we're having a pretty outsized move on our portfolio. What I'm currently doing is, because I don't know which way the market is going to go and if this is possibly a bear market rally, which is kind of what I'm thinking, I'm trimming some of my positions here. I was using some leverage, and which made it a little bit more painful than it needed to be. So at this point, what I'm doing is significantly reducing my leverage exposure to almost zero. I'm kind of taking my leverage off of the board because if this is an extended bear market, in my opinion, the only way that, as a long-term investor myself, I have a timeline of, decades. So I'm not going to be selling anytime soon. The only way that I can really get caught and have an extremely painful time during this possible bear market is if I'm using leverage, and if that leads to a margin call or, forced selling in some way. So to take that risk completely out, I'm reducing my leverage. That way, even if we drop another 10 or 20% from here, which I think is unlikely but possible, that it won't, completely blow my account up, and I'm just reducing my risk. So I'm holding a lot of equities, mainly in the form of ETFs. I'm holding S&P 500 and NASDAQ as my biggest holdings. So we have about $6,000 invested in each of those ETFs. I also have some pretty big positions currently in Google, Facebook, Adobe, Microsoft, Amazon, Starbucks, Home Depot. So these are pretty much my core positions here, is these big ETFs and then some of these mega cap tech stocks, as well as some other single stocks that I think are at decent valuations. Below that, I have a couple of other stocks. We have Union Pacific. I have Intel as a dividend play. I have XPO Logistics, which I think is undervalued, although it has had a really nice day today and a really nice week during this past week. I have some Shopify. I have VTI, which is another ETF that follows the S&P 500. So mainly, I'm invested in the indices right here. I have a lot of money from my portfolio invested in these major indexes because, first of all, I think they're a little bit more stable. Second of all, with single stocks, let's say I want to invest in Apple and, all of these single stocks. If Apple has a bad quarter, that could, drop my entire portfolio by a lot. If I'm invested in the S&P 500, even though Apple is the biggest part of the S&P 500, I'm just reducing my risk, reducing my portfolio volatility, and the amount of pain that I may or may not have to endure. With that being said, that is pretty much where my portfolio's at right now. I'm also holding a decent amount of hedges. I have VIX options. I have like 4 or 5 VIX calls on my Thinkorswim account. I also have some inverse ETFs here in small positions on the volatility. So I'm pretty much long volatility as a hedge. I have a little bit of short NASDAQ exposure as a hedge, just kind of neutralizing some of my long positions, especially after today's rally. I think we're due for at least, maybe a 1% pullback from these levels. Even if we do continue to go higher, I don't think we're going to have another, 2 or 3% up from here without going maybe 1% down. So I just think the next 1% move in the market is probably going to be down, and then from there it could continue to go down or it could continue to go higher. So we'll have to see. So just wanted to give you guys a quick update kind of where I'm at and where I've been. I've been kind of taking a little bit of a break from uploading content and just focusing more on my trading and the businesses that I run and my home. I'm doing a lot of renovations and stuff like that. So thanks for tuning into this video, guys. Thanks for staying subscribing. I'm going to be continuing to upload regular content from here. I'm back at it, back on the grind, and I'll be uploading content daily for you guys nearly. So thanks for watching, guys. If you have any questions, don't forget to smash that like button. Subscribe to the channel if you haven't already. Drop a comment. Let me know how you're trading this markets and how you've been seeing if it's a bear market rally or if this is the bottom and we're starting a new bull market from here. So thanks for watching, guys. We'll talk to you soon.